There's a bunch of things we take for granted around electricity, and we basically want to focus on that ecosystem and build the crypto ramp to the electricity ecosystem. That's the ultimate goal in electricity. That, like, grids, the way they're built, there is a lot of room for efficiency, and you can really make a big difference by integrating internet on top, if you will. We'll start with India and Africa because we understand those spaces and we know that those spaces need capital.
Hello, everyone, and welcome back to the Unleashing DePIN Podcast. My name is Tyler. I'm your host, and I'm quite excited for our next guest that we have on the pod. We have Ruchir. He is the CEO of ReNRG. Welcome to the podcast. How you doing?
Very good, Tyler. Thanks for having me.
I'm excited to have you. This is going to be a fun conversation. You're building in a space that I'm quite interested in. I'd say out of the whole DePIN landscape, I'm probably the most green on energy, the renewable energy space. So I'm excited to learn a lot and hopefully share that with folks. But maybe before we jump into things, can you give a quick introduction about yourself? Just kind of level set the conversation, help folks know who you are, what you've been doing, and then we can jump into everything you're building from there.
Sounds good. I'm a programmer who's had the privilege of building a few businesses. I've exited a few. I've been part-time crypto since 2013, mainly because of my programming roots. I've been interested and have owned a bunch of crypto, including projects. But this is the first time building a project. When I sold my last business to Vivendi, I was talking to my business partner, Matthew, who used to run $1 billion in oil rigs. He sold that to KKR. And we were figuring out what next. For a range of reasons, we ended up investing in solar in India, and we built a $15 million asset book in the last 2 years. And through that journey, we've reached a place where we're now building ReNRG or NRG, which is basically an electricity protocol.
I love it. You've been in crypto for a long time. You've been a pretty successful entrepreneur. I'm curious, what was your first decision to go into the solar business in particular? Was there a genesis there that happened and you said, hey, this is the type of business that we want to go into? What was why solar?
Yeah. When I exited my last business, whatever I did next, I wanted to make sure that I was adding value to the world. And that might sound altruistic, but it was just selfish. Like, I didn't want to do something that just help other people make money, for example, or make money for the sake of making money. Matthew was very keen on financing renewable energy because especially the space we operate in, which is small solar, financing is not straightforward. Most money available today, especially in emerging markets in renewable energy, is for big solar, big wind, and so on. He got a deal to invest in a solar rooftop in India. We did the numbers. They made sense. That's how we dived in. We just raised money for this small project, which ended up being our first project. And then when we were raising money for that business, one of the visions was to build a virtual grid on blockchain because there's all this economic value you can unlock through crypto, and the incentives make the rollout for renewable energy or capital for renewable energy roll out faster. So that was the original vision. But one of our investors said, hey, don't do crypto right now because the underlying business of solar financing is quite hard. Understand that properly. So that's what we did. We dropped the crypto piece early on, built an actual business, figured out what it takes to underwrite financing in these markets. And then now, as we were building that business, it made sense that this was the time to go back to our crypto vision.
I love that. Yeah, there's certainly a lot to unpack there with driving capital efficiencies, leveraging the Web3 DePIN part of that model. Maybe for people that are trying to really understand the solar business on the front end before you can maybe enhance it with the DePIN or the crypto component, can you talk through a little bit about that business model? Because I think a lot of times it's this nebulous concept that people hear about. It's really common, but the actual business model of it is a little bit less known, maybe more of an unknown. Can you share some of those nuances or details just so people have a high level understanding of how it all works?
Yeah, the simplest way to think about it is it's like home financing. So let's say if you want to install solar in your business, the upfront cost may cost something like $100,000. In fact, our average project size is about $180,000.
Wow.
But instead of being able to, you don't want that money tied up in electricity, you want to buy new machinery. There's a bunch of things you can do with that money. So instead of having that capital tied up front, what you can do is find somebody like us. We signed this thing called a power purchase agreement. So we try to sell you electricity over the next 10 years, and installation, management of solar, all of that is our problem. And we then sell you electricity, let's say for 9 cents or 10 cents a unit for the next 10 years. And by doing this, by spreading the cost of solar over the next 10 years, we're basically trying to generate a 15% or so return on the asset. So the customer wins because they don't have to fork out the cost of the energy upfront. And we benefit because we get to install solar and generate a return for investors. So that's the underlying business for which we basically deployed about $15 million in the last few years.
Wow. And is that 15% arbitrage the difference between what you can sell energy back to the customer at versus what it costs you? And it's like that,
You got it.
difference is your 15%?
Yeah, think of just investing the money upfront and then generating a yield from the generation of electricity and selling it over the 10 years. You're basically generating, I think the American term would be APY, but an IRR, internal rate of return on that asset.
Yep. I like that. So let's unpack really so you've got the solar business where you're financing solar deployments. Those are going up. Talk to me about the on-chain Web3 DePIN component. What is the benefits or the ability to put these different assets on chain, creating, as you called, like a virtual energy grid? What does all that mean? What are the benefits?
Yeah.
Can you help share that for people?
Yeah. Let me take a step back. So why are we even considering Web3? Besides the fact that we had thought about it at the beginning, because we do these smaller solar systems, we have to maintain them, we have to manage them. And as a result, we built this hardware, an IoT gateway, if you will, that connects to inverters, meters, radiation sensors. And we've accidentally made it compatible to 50 different types of devices so far. Why did we have this device? Because we want to build monitoring capability and the ability to restart an inverter and so on. So we're building applications on it anyway, and we were about to build a crypto application on it, primarily for payments. And it made sense because electricity hardware generally is walled gardens. They don't have many like common APIs or common ways for this hardware to speak to each other. So we saw that as an opportunity, and we believe that having a device that can integrate with all these endpoints in electricity and having a crypto layer can generate all this value. So that's why we decided that this was a good time to build an electricity protocol. At a minimum, we're going to build these applications on top for us anyway, just to manage our own asset network.
Sure.
Now, through that journey, we were thinking about what would be a good customer-facing application. And given what we saw with all of these DePIN applications, we thought it'd be a great opportunity for someone like Tyler in Austin or a Matt in New York to be able to own solar in Rwanda or Kenya and India and get all the economic and environmental attributes of it. So let's say we have a solar plant in India or a car dealership. Tyler could have a deposit down with us, own the panel in that car dealership, and we would basically give you a return in the form of NRG that you can then use for various electricity applications, including paying your own utility bill. So that's the solar DePIN network that we're building out now.
Very cool. So you can effectively democratize ownership of that solar asset, if you will, through your token by having that on chain. That's really cool.
Right.
And I can use that as an investor to offset my electricity costs or other things that I'm paying for based on that yield that you were otherwise generating from the, call it, centralized business model.
Right. And the thing about electricity, the physics of it doesn't allow us to track an electron when it enters the grid or exits the grid. Most places, if you're buying specific electricity, they're simply metering it at the point of generation, metering it at the point of consumption, and then you get to offset it in some mechanism through a bill or so on. So we're basically offering the same thing over the internet. And we make sure that the electricity is balanced and there is fiat that enters the network. But ultimately, we're giving you the same electricity, the economic value of that electricity, and it's verified. There's proof of generation. So it makes sure that it's coming from solar. Businesses who buy renewable energy credits can buy direct solar electricity instead by owning the panels in different grids.
Yeah. Can you talk to me a little bit about that? Because I know buying credits or that entire market's pretty interesting. It's also fairly complicated. There's a lot going on. How does that interface with the network that you're building and specifically the token? What's the intersection between those two?
Yeah, I think a lot of the times if you see people trying to solve problems with renewable energy credits or with carbon credits, is the deployment of capital, removing additional carbon from the atmosphere, or is it creating additional renewable energy? Because businesses want to claim net zero, and they can only really claim net zero if there's additionality. So,
Yeah.
so part of the challenge is there's all these auditors in this. There are lots of options, and there are auditors in each of those networks. And it's not an exchange; it is a marketplace. So the quality of that credit, depending on where it comes from, the price is different. Similar for carbon credits and so on. So one of the things businesses want is renewable energy credits that are verified at source in terms of generation, so that they can claim additionality. And RECs in emerging markets tend to be more valuable because there's less of them being created. Let's say, I'm just taking a random example, Microsoft has lots of businesses in India, and they want to have renewable energy credits from India because they want to offset their India footprint. They would like to buy more clean energy from India. So platforms like us can offer that. And like, of course, with crypto, all of its benefits, it's transparent, it's more trustworthy and so on. So that's what we will offer as an application.
That's really exciting. And so if a customer like Microsoft, for example, let's say they buy 10 of your tokens, does that transfer 1-to-1 to like whatever the carbon credit, I don't know if it's called like the denomination or however much value that carbon credit is? Is there like a 1-to-1 relationship there?
Yeah. So the way to think about it is we simply just transfer the value of the energy. Now, a certain amount of that energy together allows you to represent a REC. A REC is usually 1 megawatt hour. So then you can put a dollar value on it, a fiat or a token value on it if you wanted to. And so if Microsoft wanted to buy an X amount of RECs, we can easily do the maths for it. So you can transfer that value completely. As a network, obviously, we take fees, and we're like, the goal is to build underlying value from the network and obviously help all the holders of ReNRG accrue value in the process. But ultimately, we are really working towards building this electricity protocol where then we can build all these other applications like the auction engine or the solar DePIN or you paying your utilities. There's a bunch of things we take for granted around electricity. And we basically want to focus on that ecosystem and build the crypto ramp to the electricity ecosystem.
Yeah, no, that makes a ton of sense. That's really interesting. Would you say, at least with respect to companies that are trying to offset some of their carbon footprint, are you going to be selling your token directly to them? Or do you think it would be via like a carbon credit marketplace, people that are already going to the market to purchase these credits? Who do you see being the customer in that sense?
Tyler, because our focus is on the electricity protocol, we want to enable applications on top. And that means, especially in the question of RECs or carbon credits, we want to plug into existing marketplaces that already have buyers. And we want to then enable the supply of these energy attributes to that marketplace. Wherever possible, we don't necessarily want to reinvent a wheel, but we'd rather just plug in where there's already demand. We have the supply, and that's a big benefit we have in this equation. So how can we monetize the supply is going to be the big part of the question as we build this.
Yeah, I love that. And I appreciate that you're thinking through the multifaceted challenge at hand, but you certainly have a lot of the supply problem taken care of, which is obviously a big part in bootstrapping both sides of the marketplace. I'm interested in how you're thinking through future solar developments with the energy protocol that you're developing. One of the things you mentioned was the fact that you can interface with all of these different types of systems. I think you mentioned 50 specifically. Do you foresee that you will be really an enabler for other people to go out and do their own solar deployments instead of being the kind of the person handling that on the supply side? Can you help me understand that with the protocol?
Yeah, I'm grateful for that question. So we think of our current sort of available assets as a beachhead, the first market through which we bring supply on chain. But we don't obviously want that to be the only available set of assets. We want to extend the network across the board to different type of people. Initially, for the solar DePIN, the folks who are building renewable energy assets, we'll start with India and Africa because we understand those spaces and we know that those spaces need capital. And underwriting is hard, but we understand it, so we know how to bring different asset owners on chain and give them the incentives to do more, because these markets really need that capital to transition towards climate adaptation. So initially, although we start with our solar, the idea is then to bring battery storage, bring in hydro, wind, and so on. As we grow, then we want to bring assets from other parts of the world too. And especially if we build compatibility, build applications on top, then we can do a lot more by integrating with these assets. Ultimately, meeting demand with supply. That's the ultimate goal in electricity. That, like grids, the way they're built, there is a lot of room for efficiency, and you can really make a big difference by integrating internet on top, if you will.
Yeah. Yeah. I love that. And I definitely want to unpack sort of the future state of the protocol where you're going to be able to interface with other types of renewable energy sources. But I did want to unpack a little bit your beachhead, if you will, with India and Africa. You said that you've got really a good understanding of that. Why were you focused on those markets initially? Where is it just a big opportunity where demand's not necessarily being met? Was it something that you just had a previous understanding? Can you talk to me through where you're serving, and then maybe over and above that, where you're looking to expand after Africa and India has been saturated?
Yeah, I think it's a little bit of everything, right? Like it's a little bit of our background, like we built businesses in these markets, but it's also the fact that these markets need the capital. They need energy security. The strangest example is Malawi faces all these outages of electricity. And often people there don't necessarily want to switch to renewables because of the outages, but because there is theft of diesel, because there's so much diesel on site in a lot of these locations. So the energy security piece is extremely interesting in a lot of these markets, and they really need capital for renewables. That's the number one reason why we focus on these markets and why we're driving capital to this. And we see ourselves as translators for the underwriting, because underwriting is complex. People don't feel comfortable deploying capital. And if we build a good enough bridge for folks where I expect there will be defaults, of course, there are defaults in any markets where you invest. But assuming that we can contain those defaults for 2 to 3%, maybe 5%, we can build a real robust ecosystem around driving capital. So that's why these markets. I think the way we think about other markets is on the demand end. If a Tyler in Austin is buying electricity, can we do other things for Tyler around the electricity protocol? And that's basically around simplifying your life. So everything from paying your bill without you opening your utilities website to looking at dashboards that show you where your power is coming from, what's happening with it. My favorite example is the Tesla Powerwall example in California, where can the battery charge when the supply is really high, and can the battery discharge when the demand is really high? And that way you can pay for your battery within a few months. So there's a bunch of things that are possible when you first have these ways of connecting with electricity hardware. You put an intelligence layer, and then you can put all these AI agents on top that can do a bunch of things that make your electricity supply easy.
Yeah, you're really bringing the full stack smart grid protocol to what is otherwise a largely inefficient market, I assume, with whether it's on the capital inefficiencies or just matching the supply and demand. There's certainly a lot of value to be added with an approach like this.
One thing to defend like the innovation in electricity is that obviously reliability is the number one feature that most people have focused on when building electricity hardware. It's just that has been going on way before the internet was invented, and the market hasn't really adapted around the internet. So that's the bridge we think we can bring.
Sure. Before we talk about some of the other markets, whether it's wind or whether it's hydro, how are you incentivizing some of the supply side or the deployers on your protocol, people that might actually be setting up solar farms? Obviously, you've got a lot of experience underwriting these in the central model, but these are expensive, large scale, probably complicated things to set up. How are you building the incentive model in the early days of the protocol?
Yeah, so we're thinking about three main things. One is just helping them free up equity. So solar DePIN, if I can get somebody in Europe or somewhere to buy the panel, you're basically releasing capital for that solar developer in these markets, and they're able to do more renewables with that capital. And almost all the time, that's what they're doing with that capital. The second thing is we want to incentivize the developers for higher performance. So when they come on chain, there's an easy way to price it. You can put a logger on it for a month. You know how much it generated. And on that basis, you can basically build a net present value and give that operator an offer. And so there's not a lot of complication. But that's just a benchmark. Now, any performance above that benchmark, you can effectively share the proceeds with that developer. And if they do better with that asset, they generate more, there's more renewable energy on the grid, and they have incentives to perform. The third thing is, it's not obvious to a lot of solar developers that they have all of these renewable energy credits that businesses in the West want. A simple example, a large corporate, everyone's heard of them, came to us and they offered us for a specific plant, REX, for 1 year at a certain price. And our reaction to them was, it is helpful, but we will build the solar plant anyway. It's not meaningfully additional unless you commit to us for the next 15 years. And
Right.
so they went back to the drawing board, came back and committed to us for the 15 years. And I was like, fine, I believe your contributions additional in nature. And we've now, that money is meaningfully helping repay the investors and get them excited about doing more. So we want to bring in the same opportunities for these credits to these other solar developers. So if we can at least we can plug into the demand side of that ecosystem for the asset folks on the network, then that'll be a big win on its own. So basically doing these three main things as incentives to bring these folks on chain.
That's great. That's really great. One other question with the actual kind of technical mechanics on the protocol side. I understand that with your, call it the centralized model, you have a IRR, a rate of return that you target. And then after that solar deployment has been paid off with whatever the return is, there's no ongoing cost that the business owner would continue paying. As you tokenize these assets, is there still like a fixed maturity window of the 15 years where after that 15-year period, a person that has maybe one solar panel in the deployment farm stops earning? Is that how the model works in the tokenized model as well?
Yeah, that's right, Tyler. So I think like ultimately the variables are not as many when it comes to bringing these assets on chain. So it's usually like length of term, the rate of term, the generation, the expected generation, the cost of installation, and so on. There's maybe 6 or 7 key metrics, so it's easy to evaluate a lot of these assets. Often the harder part is evaluating the business, the local business to which that electricity is being sold, because there's a lot more variable. Bringing these assets on chain, putting putting some sort of economic value on it, and then being able to transfer that economic value is relatively straightforward. One of the things we do intend to do is, although because we're early, we're experimenting different models. Right now, we're thinking about NFTs at a plant level and then fungible tokens that represent individual panels for that plant. But we might create pools so that there's no default issues attached to a given asset. Because ultimately, the person just wants to buy it. Like they don't want the hassle of underwriting. Yeah. That's our problem. So if we want to make it simple for Tyler or anyone who's coming on, we want to do it in a way that doesn't give them hassle. So we're still experimenting with these pieces, but likely we'll have an option for people to just blindly buy a panel and we'll allocate it and we'll underwrite the energy that goes to the user who's buying.
That's interesting. You could bring the novelties of the interesting components to DeFi into your energy protocol, which is great. And then, but over and above the, call it 15% rate of return, there's still additional protocol revenue that's generated that's beneficial to a token holder. So even after that target rate has been achieved over a 15-year time frame, for example, there's still the protocol revenue that's generated and would presumably benefit token holders.
And that's right. So the way we've thought about the tokenomics is we basically allocate a certain amount of the token itself to this clean energy transition pool. And it does a few things, right? It buys, it accrues assets on chain. It makes them available for demand as necessary, but it also reinvests all token revenue into this pool. And the most important thing about that is as it invests more into these assets come on the network, and they're using more energy as well for a range of transactions. So the idea is there's this self-fulfilling cycle that we can build around using the network to bring more assets on chain and accruing that value back to NRG. So we really should think of this in 2 or 3 ways. One is obviously using the network effects to get more assets. But then as we get more assets and we build out a network, we then use that to build out the protocol component, because ultimately if we have more nodes, if you will, then we'll have the ability to use applications across the board.
Yeah, that's really great. One of the things that I also want to unpack was your kind of future roadmap expansion as you're looking at the other types of renewable energy. Obviously, you're the design partner with the solar side of it, with other types of energy generation, whether it's wind, whether it's hydro. Will you find design partners to help flesh out the protocol development from a partnership standpoint? Do you think you'll expand your other business, which is DeNRG? We haven't really chatted about that. That's the current model, to bring the hydro or wind component. How are you thinking about the future evolution of the protocol and specifically those other energy sources?
Yeah. So the way to think about what's adjacent, the low-hanging fruit, the most adjacent piece is the battery piece. The reason why battery rollout outside of South Africa is relatively slower in India and Africa, primarily because the cost relative to the grid is still high. So the average cost of electricity in India, give or take, is around 10 cents, whereas in Europe, it's closer to 34, 35 cents. And then the levelized cost of electricity of a battery is around 15 or 16 cents. So batteries are more competitive, say, in Europe than they are in India or Africa. So the economics of batteries have not made them as prevalent unless there are a lot of power outages, which in some African markets there are. So places like Malawi, Zambia, etc., you can have storage. So storage is like the most natural extension of solar, and that's probably where we'll go next. Hydro and wind tend to be more capital intensive, even more than solar. Wind is slightly lower in cost relative to hydro, and you can have smaller turbines. So your average cost is it's $500,000 to $1 million for at the lower end of the turbine. So you can do more, and then you can tokenize the assets with wind. With hydro, it's even more expensive because obviously you need water flowing and you have to build a dam. So the cost of that project even is increasing. So that's the natural progression one has to take when building out like the DePIN piece of people buying renewable energy.
Great. Are there other DePIN projects that are maybe tangential to what you're building that might be interesting partners in the future, whether it's on the battery side or with electric charging?
Yeah.
Are there any projects that pique your interest that might be partners in the future by chance?
Yeah, like I've been looking at Power Ledger because they built out a marketplace for their renewable energy credits, and we just want to plug into their marketplace. They're primarily doing the US, so they have demand in the US and they have supply in the US, but they have no supply in India or Africa, so we can plug that in. There's a bunch of these relationships where we can bring revenue to chain fast, and that's something what we want to prioritize. So it's something we'll spend most of our time on. The other part I think a lot about is meter supplements for home, so that we can translate that vision of making your life easy at your utility level possible. So we're working on a couple of partnerships at that end. I think, Tyler, one thing I love about Web3, because I've been partner in Web3, like really just getting the handle of it, is partnerships are such a big part of the equation. So I find joy in the fact that people are open and they're willing to spend time with you and want to collaborate because it adds value to their own network as well. So they are really helpful, which I love.
Yeah, I do love the collaborative nature of Web3 in general. And it also, when you're talking about global energy markets, there's a lot of location subject matter expertise that's probably relevant to that conversation. So if you guys can support each other through those endeavors, I think that's great. One of the things I'm interested in, maybe over and above what you're building specifically, or just to get your kind of viewpoint on, is what are the trends that you're seeing at a global level with respect to the energy sector, and maybe some of those problems that aren't being addressed in the, call it Web2 centralized model today, that you think are really primed for disruption, innovation, so on and so forth?
Yeah. May I just focus on the sources of energy? There are so many threads I can pick up in that question, but I'll focus on the sources of energy because I think people relate to that conversation and where things are. The main challenge with solar and wind, as much as we'd like most of the grids to be solar and wind, is the intermittency of the generation of power. If you run a factory that needs to draw a lot of power, let's say at 9 p.m., and there is no wind and obviously there's no sunlight, like where does that power come from? So at a grid level, you do need to have sources of electricity that rely on some sort of a fuel that's not natural. So coal, or as in by natural, not sunlight or wind. So coal or nuclear, even natural gas. So at a grid level for energy security, it's the number one challenge that most grids face, that they're not able to transition fully to renewables. But what you can do is have renewables really do two things. One, bring down the cost of your energy, like substantially. And two, make your energy, make it the energy mix on the grid a lot more durable if like coal prices go high or if nuclear takes a long time to build and so on and so forth. There are all these challenges with other forms of energy. Solar and wind can really help complement those. So that's where the rollout or the thinking on the rollout is. The big issue we face or we see in renewable energy, just mostly in the markets we are in, which is emerging markets, is that the cost of capital isn't low enough, especially for the end user. And until that cost of capital comes down, the transition will not be as fast. It's really good where it is, but most of that is to the benefit of larger businesses or to the governments. So that has to change. I think one last comment I'll make, at least on the sources of energy, is I have seen a lot of conversations around nuclear, especially in the last 12 months. I think maybe it is Donald Trump's election that has changed people's mindset on what that is. But people are more open to nuclear than they were, let's say, 4 years ago. And I think we're going to see a revival of nuclear energy, especially on the smaller reactors being built. The main challenge with nuclear is going to take time for people to ramp up. You can't just build something overnight. It takes 6, 8, 10 years. So that's the journey we're on. And I think reaching people who need it is now the final frontier, I feel, in electricity.
Yeah, I certainly appreciate that. And it's really helpful to get an understanding of what the broader market is looking and seeing where the opportunities are going to be created in the future there. And obviously that's going to benefit you as you're working through developing the protocol. Speaking of the protocol, what are the timelines for different milestones with your development, whether it's public facing accessibility for folks, token? Can you just talk about the future roadmap there?
Yeah, so like the architecture of the token is well underway. We're currently building on Solana. We've already got an application that users cannot see, but we're basically playing with it, making sure that it works. We're tokenizing about $120,000 of assets in a location in India right now. So we're basically building a waitlist around that and we see how we go. And my view just on building businesses is revenue comes above everything else. When people pay money, you're really like proving that there is a business model there, and we're just working on opportunities for that. We are figuring out internally whether we open up to the market early or we keep figuring out revenue earlier privately. So I don't know when we'll go public, or at least I don't want to say it here. I have an idea, but I'm not yet fully committed to it. So we will go to public and then we'll open up to the public in the next 3 to 6 months. But whether it is 3 months or 6 months remains to be seen, especially around where we find traction, which is what we're focused on.
I love that. I certainly appreciate that you're revenue focused. You're building this in the right way, going back to first principles. Oftentimes that can be missed in the Web3 space. So it's from a project evaluation standpoint, it's always really amazing, incredible to hear projects talking about that as kind of the focal point to drive other types of development. So I certainly applaud you there. Gosh, was there anything else that you wanted to add that we didn't get a chance to chat about? I feel like we covered so much, but I don't know if we missed anything that you want people to be aware of.
No, great questions. I think for now, the only thing I can think of is finding more and more applications in terms of aggregating use cases for electricity. So that's the only thing we're mostly thinking about. So especially if people have ideas about ways they want to interface with electricity, please reach out to us, because besides the things we are already building, if we see an opportunity that makes sense and it's obvious, we'd love to collaborate.
Yeah, that's a great call to action. And so with that, we'll certainly have all of your links below. Where's the best place for people to go find what you're doing, stay up to date, and also get in touch with you if they have some of those ideas?
The simplest way is ReNRG.io, which is ReNRG.io, and then all our social links are at the website.
Okay, perfect. Like I said, we'll certainly have that below. Ruchir, I appreciate you coming on, getting a chance to chat about what you're building. I think it's a really interesting space. It's a multifaceted problem. There's a lot of complexity. You're solving it in a first principle style way, and you've really validated a lot. And obviously how you're going about the protocol development, I think is going to get people quite excited. I really appreciate you coming on, getting a chance to chat about it. So I think we'll wrap it up here. Definitely go check out all of the ReNRG resources and what they have on their website. We'll definitely link that. We'll link X as well. If you've got some ideas about how you might be able to improve what they're building on, or if you want to get involved, certainly go drop them a ping. But We'll wrap it up here for everyone. Thank you so much for tuning in, and we will see you on the next one. Take care.
Thanks, Tyler.
Thank you.